Hello friends, this is Saju from bullriders.in. This video is about stock market and trading tips. Nothing but a smart investment and the trading tips. When we talk about trading, there are few other terminologies which keeps buzzing around us like stock market, FII, DII. So in this video, I just wanted to talk about these few terminologies which would help the new traders to gain knowledge on trading. Before we start anything, any process, it is always necessary and advisable to understand the basics. So let's start with the stock market. There are 21 stock exchanges in India, with BSE and NSE being the largest. NSE is the 11th biggest stock exchange in the world, which is established in 1992, and the Bombay Stock Exchange is the oldest stock exchange in Asia, which was established in 1875. The benchmark index on the NSE is Nifty, whereof for the BSE it is the Sensex. For your information, New York Stock Exchange is the biggest stock market, followed by the Nasdaq and London. And another information is the Amsterdam Stock Exchange being the oldest, which was established in somewhere around 1602. So before we start with stock exchange, we should think about the stock price of the stock. Stock is nothing but after a company goes public and starts trading on the exchange, its price is determined by the supply and demand. When the demand is high, obviously the price would increase. And that's how the stock price is calculated. And these stocks can be traded in any of the exchanges, but normally a trader would prefer where the maximum transaction happens, and primarily in India, majority of the people prefer NSE, where maximum volume of transaction happens. And who controls or who works on this national stock exchange? In order to understand that, there are few other terminologies which comes including to this, which is FII and DII. FII stands for foreign institutional investors, whereas DII stands for domestic institutional investors. FII and DII activities play a big role in stock market. FII is an investor registered in the country outside the one which it is investing. That is why we call it as FII. They can be an insurance or mutual funds, any kind of investors. FII invest in the countries which are in developing economies. For us, the FII, one of the example is Morgan Stanley. When the foreign investment is more, our economy is growing, or vice versa. Whenever the economy is growing, foreign investors invest their money. The other one is domestic institutional investors. Those are Indian institutional investors who invest in Indian financial markets. For us, one of the example is LIC, HDFC Mutual Fund, etc. Foreign institutional investors are the biggest shareholders on all Indian companies put together. If you look at the diagram, the investment by the foreign institutional investors is around 40%, which is a huge investment. So what we understand is like whenever a foreign institution is investing or pumping money into our market, our benchmark indices is going to increase, our economy is increasing. If the foreign investors are pulling out the money, it means that our economy is getting weaker, indices are getting weaker, and obviously share prices are going to get decreased. For example, in the past we have seen the foreign investors pulling out around $500 million. At the same time, we can see that the Sensex is falling 1000 plus points in 2 days. FIA can make a fortune of the stocks. The key point is that every trader and investor knows FIA's activity is very important, but you should look for the state in which FIA are, the stock in which the FIA are going to invest, not already investing. So try to do some homework, find or pick the stocks which the foreign investors are ready to invest the amount on those companies, and it is always good to get ready with those stocks to invest. So to be specific, whenever the foreign institutional investors are investing a huge money, there is a rapid growth in the economy and the benchmark indices. Whereas at the same time, if there is a domestic institutional investors investment is also increasing, definitely there is also going to be a increase in the benchmark indices. But if foreign institutional investors are selling their or recovering their investment or pulling out their money from our stock market, then there is a reversal. Five keys for the training. This I would like to share with the beginners who are new to the trading. Please understand that the trading is not a one-time job or a single shot job. This is an art where consistency plays a major role. Definitely there is no chance of getting 100% success in trading, but if you are consistent with key factors, you will definitely succeed. When I talk about the consistency, it is like, okay, if you trade one day, if you are on loss, exit. No, this is not going to happen. It should work for a month or a time frame. For example, you start the trading with Monday, you earn 500 rupees. On Tuesday, you will earn another 500 or 200 rupees. And Wednesday, you may lose another 500 rupees, and Thursday you may earn 100 rupees. So this is going to continue, and you need a consistency. After a time frame of about 4 weeks or a month, just look at the ledger. What's the outcome? What is the profit and loss which you have got by trading? If the loss is high, you have to change your trading techniques. You have to fine tune your techniques and get back to it with consistency. You will know the profit and loss only after certain period of trading. This cannot be detected in a single day. Next is discipline. Do some kind of analysis. Pick an entry point. Wait for the entry point and start trading. If you are hit on stop loss, yes, you are fine. You can exit. Don't keep taking losses. You exit from the script. Look for another opportunity and you may try to jump in. There are other things like averaging, which is also very risky. You should always try to avoid averaging, because you do average when you are already on a huge loss, and if you again get into loss, this is going to be a huge loss. So please trade with discipline. Define your target, define your stop loss, wait for the entry and get into the trade. Patience. You do analysis, you find the entry point, and you have to peacefully wait with patience for an entry point. And if you are already made an entry, be patient until you hit the stop loss or the target. In the meantime, don't be in hustle to exit or book profit or something. Patience is very much needed. Don't try to take revenge with the market. Don't enter into market thinking to recover your losses or make a huge profit in a day or two. Start your trading with small targets, and as on your confidence builds, you may try increasing your stop losses. You have another opportunity like trailing stop loss, which would also help you. Confidence is very much needed. What are the trading techniques you implement or you test, you do with confidence. Never have any second thought. And passion. You should always have a passion to trade, learn new things, learn new techniques, explore the platform, explore the internet. What are the brokers available? Explore it. What are the platforms? What are the advantages? What are the disadvantages? Improve your skill in trading. That's all will improve only with the passion that you have it inside. So with these 5 keys, I'm sure you will become a successful trader. Now I would like to give you few trading technique tips, like avoid big investment. For example, if you have a 30,000 capital investment, try to trade only with 1/3 of your amount, 1/3 of your capital amount. If you have a 30,000, trade only with 10,000. Keep 20,000 as a backup or for tomorrow. Before you make for any entry, you define your target and your stop loss. And be very strict with your target and stop loss. As soon as the target is hit, you make an exit. If your stop loss is hit, make an exit. whether you book your stop loss or book your profit, make sure you are very much strict to your target and stop loss. As I said earlier, skip averaging. Averaging may help you in few scenarios, but 80 to 90% of time this is going to screw you up. It is going to kill all your money and will make your capital zero. Next, don't love any script. Don't trade only on a single script. Don't try to do analysis, find the script, find the entry level, book your profit and exit. Don't keep trading on a single script every day, because one fine day this is going to kill you. Patience. Wait for an entry. If your analysis says like if a share price is going to hit 265, then wait for 265. Don't enter into 264. Never. Once you found an entry point, wait for the entry to get in. And during trading, keep calm and patience. Don't get emotional. Never. This is a systematic trading. You have to be in systematic way of trading. Keep calm, keep patience, keep monitoring. Pick your stocks. Do analysis and wait for the entry. I'm sure you will get a good handsome amount of money. The success mantras in this trading platform is like avoid blind entry. Don't be sentimental or emotional, or don't enter into trading blindly. A blind entry can knock you out. And when you made an entry, if your stop loss is hit, better you exit. That's fine. You define like your risk and reward ratio. If it is 2:1, okay, 2 is my profit and 1 is my stop loss. That's fine. You can take that stop loss or the loss. That's fine. Always, anyway, you have the other amount to find a good entry and recover the loss which you got it recently. Never keep carrying your stop losses. That's going to take you blind. So if you are very strict with your stop loss, I'm sure you will save your capital and you will earn a very decent profit in a regular manner. You don't have to trade every day, every time, nothing. Just pick the best scripts for best entry and wait with patience to enter and book profit. For the beginners, we have course material which will guide you with few unique trading techniques which are like pre-market, average breakout or the last hour breakout, trend breakout, reversal, VWAP. So there are 6 unique consistent trading techniques with high accuracy that's available in our trading course. If you take up that course, you will be able to trade yourself. You will be able to pick your stocks. You will be able to enter. You will be able to find the entry level with the target and stop loss, and you can start trading. If you wish to have our trading course material, you can reach us at NSE Bull Traders in Telegram, and we'll share you the course material. Other than this, we have a Telegram channel where we give daily calls which are high accuracy, and we also provide an automated trading platform on a cloud desktop in a nominal fees. And we do also do the mutual trading. So all these details, if you require more information on this, please reach us on NSE Bull Riders in Telegram. And our free Telegram channel link is below this description. You can join us free. Thanks friends. Thanks for watching this video. Please subscribe and hit the bell. Thank you. Bye.